Adam Shapiro, thank you so much. China also enjoying its own market rally today, pretty much in style. The Shanghai Composite closed out the day with its biggest intraday gain in a month. This after another round of disappointing economic data out of China that has investors hoping that, well, maybe more stimulus is just around the corner from the Chinese government. So what does all of this mean, though, for U.S. markets and investors here? Economist Austan Goolsbee back with us, along with Elizabeth MacDonald. Thank you both for being here.
Sure.
Liz, let me begin with you. So we saw the Shanghai Composite today bounce up nearly 5%. Is that an artificial bounce just based on what the Chinese government is going to do?
Yeah, the Chinese government is acting like the, market's elevator operator. You can't find the floor in these stocks. That's a word from the Wall Street. And in fact, Goldman Sachs actually put out a report of the 20 top S&P 500 stocks with the highest exposure to China. And they number, among them, Wynn Resorts, Qualcomm, Broadcom, Intel, some big names. And the word on Wall Street is that, China is following, they're worried about the typical boom-bust pattern of an emerging economy. So the worry is this a structural problem, not a cyclical issue, that there may be a prolonged slump in the offing here for China? That's what the worry is on Wall Street.
Very good points. Austin, to pick up on what Liz was saying, I mean, is it almost like a house of cards in China? You're never really quite sure of the information you're getting, how accurate it is. But nevertheless, there are some concerns there that perhaps the weakness is a lot greater than we think.
Look, I think the market has told you that and has been telling you that for some time. You saw big drops in the price of oil and all the other big industrial commodities at a time when, yes, there was some excess supply, but basically the only thing that could explain it is that the world thought things were slowing down in China faster than what the government was telling you in China. And now it helps if you've got trillions of dollars of reserves. They learned from the financial crisis in Asia in the late 90s that you don't want to be without reserves if you're going to get into trouble. So they will be able to navigate it. But I think we ought to just keep an eye on this, and any stocks that have a lot of exposure to China, look for them to have a bumpy ride.
Yeah, Austin makes a good point that the China's problems were likely red flagged in the commodity supercycle bust. Remember the commodities were on a supercycle boom going up, and then, whoa, commodities are now in a pretty severe downturn. You see factory prices in China in a 3-year downward trend. And the GDP growth in China is probably the worst performance in what the street is telling us in 2 decades. And the fear is that China could bust below 7% annual growth. So, yeah, I agree with what Austin's saying there.
And Austin, just to pick up on that, so what does that mean for us here in the markets here? China's such a big, engine in the global economy, but will we pick up some of the weakness here?
I think we will, though it's interesting. If you just kind of sit down and crank through the numbers, China isn't near as important to the U.S. economy as you might think it is, because exports aren't that big of a share of the U.S. economy, and China isn't that big of a share of our exports. Now, that said, we got a lot of big multinationals, a lot of headline stocks where they get earnings from China. They got a lot of operations there. They'll be hit. Anybody who's reliant on mining, commodities, oil, those sorts of things,
Australia,
because China's such a big share of the world, they will be hit. On the flip side, if you're just driving to work each day, it's probably going to mean slowdown in China is probably going to mean lower gas prices than they otherwise would be. So we'd probably get some kickback upward from that.
Would you agree with that, Liz?
Yeah, I think Austin's right. The whole debate on Wall Street, there's always a paranoid fear that, China's going to dump some of its reserves, meaning sell off some of its treasuries. That would hurt its own holdings.
Right, exactly.
So, I don't know. I don't think there's any political maneuvering around the reserves that China has. I think they do have pretty good, decent size of foreign reserves.
Scales of economy.
That's right.
It's not a Greece, let's put it that way. I want you to listen to this. We have to bring up Donald Trump, but it's interesting. He recently highlighted the risk that lies in China. Take a listen.
Our country is in serious trouble. We don't win anymore. We don't beat China in trade. They kill us. I beat China all the time. We don't have jobs because our jobs are going to China and so many other countries.
Austin, are we always getting beaten up by China?
Look, when we're turning to Donald Trump to be our expert on Chinese affairs, we are in a sad state of the world. I think, as happened with Japan, remember there was a moment in the 80s for sure where people were super paranoid about Japan, and anything Japan did They view Japan are winners and we're losers. And then Japan had a lost decade because they ran into structural problems. If China starts having serious economic challenges and problems, the people like Donald Trump who are out saying China's better than us in every dimension, they're going to just look a little dumb.
I mean, okay, yeah, it's political rhetoric, but there is a perception out there that we seem to get the short end of the stick.
Well, yeah, and it was really fueled, in fact, by these headlines that China was going to overtake the U.S. economy, become the world's biggest economy.
Right, not so long ago.
And, you know, I put out a column, I was talking to Wall Street guys, and they're saying, yeah, that's based on purchasing power parity, meaning that the sheer number of China's consumer population was so gigantic, it would propel it. But they make, what, $25 a month maybe or a day? And the thing is, China has no soft economic power. What do I mean by that? It doesn't have the worldwide, world-renowned brands that we have. And that is the soft economic power that a lot of governments would love to have. China doesn't have the big names, the number of big names that we have trading in our markets today.
Very good point. Liz, thank you so much. Austan, also, thank you so much for joining us. I appreciate it.